Hello everyone. Welcome to Late Night Stocks. Trump announced a 2-week ceasefire with Iran just hours before his deadline. Oil crashed from $117 Tuesday to around $95, a 15% single-day drop. S&P 500 futures surged 2.7%, Nasdaq jumped 3.5%, and Dow spiked over 1100 points. Crude oil is still up 65% since the war began on February 27. So this is a relief rally, not a full reset, I would say. And gold actually rose 2.2%, and treasury yields fell, meaning smart money is not fully convinced. This is a relief rally on a fragile ceasefire. It is not a peace deal, right? But during these weeks, we had very good stocks. I will talk about them in a minute. And this ceasefire is conditional. Iran said transmit through Hormuz is possible, but subject to coordination with its armed forces, technical limitations, and that language gives Iran room to define compliance on its own terms. Experts are calling this as a pause, not a peace. A 2 week clock starts now. Negotiations in Islamabad on Friday, so the stock market will be watching this very closely. As always, we keep things simple, structured, and data driven. No hype, no noise. If this is useful to you, hit the like button and subscribe to the channel. It is free and it helps more than you think. Thank you. So, since 3 weeks, I had like 3 live streams, and from that, we had many short videos. Basically, if you look at our channel, Late Night Stocks, I made these 3 live streams, and during these times, we had lots of uncertainty. We had a market crash, and from these live streams, I gave you lots of shorts videos from different stocks, as you see. If you didn't watch them, please watch them so that you have the reference from those dates. And it was very beneficial for me. Like, we had many huge gains basically during these 3 weeks, especially these 7 stocks made huge gains. Um, like, markets were bleeding, oil was above $100, nobody wanted to touch anything. Now there's a ceasefire, oil down 15%, and markets are surging, and every single one of these 7 stocks are up. And let's go through them one by one. Fundamentals, where they stand now, and whether the move is done or just getting started. All right. Let's first start with AMD. AMD up 18% in 3 weeks, and the story is just getting started. We called AMD on March 16th when the market was in full panic mode. 18% in 3 weeks, that's not a rumor, that's a result, that's a solid gain. If you consider S&P 500 is making 15% in 1 year, making 18% in 3 weeks is a very solid gain. And here's what is driving. AMD posted $8.3 billion in revenue in Q4 2025. You can see the revenue from here, including a record 5.4 billion from data center alone. That's not a future promise, that's the money in the bank right now. And the story has shifted actually. AMD used to be the Nvidia challenger, the underdog. Now it's generating real AI earnings at scale. They have server CPUs and instinct accelerators are both driving growth, creating a more balanced revenue. The next catalyst when AMD stops selling individual chips and they start selling entire AI infrastructure systems, more revenue per customer, and they will be harder to displace. And recently, Wells Fargo just added AMD with a $345 price target, implying over 60% upside from recent levels. The stock is now at $230. It is a bit greedy in my opinion. If you look at the analyst price targets, it is now at $290. They give 17% upside potential here. So even though stock is up 18% in 3 weeks, they say there is a still upside potential. And if you look at the stock, like technically, basically, like first fundamentally, the stock is a bit like if you look at the PE ratio, it's a bit overpriced right now at 83% PE ratio. Of course, they have a huge forecast, big solid growth. So we need to keep in mind this 83 PE ratio. And if we look at the stock price, as you see, I made this live stream on 16th of March. Now stock is up 18% in 3 weeks at $230. And if you look at the big picture, we have the all-time high at 266, and analyst price target is at 290. I mean, if we go to these levels, if we see new all-time highs in a very short period, in this ceasefire period, I would take some gains, to be honest. Like 83%, 83 PE ratio is a bit high, but I mean, looking at the Fibonacci levels from here, let's do it together. I mean, if I take the Fibonacci levels from here to there, basically, like, yeah, 200 $300 looks like a target, but going there like $280 fast, I would take some profits. So yes, that was for AMD stock. The second stock I want to talk about is Amazon. Amazon 7% in 2 weeks, and the ceasefire just made the thesis even stronger. We called Amazon on March 23rd, 7% in 2 weeks, solid, steady, Amazon style. Here's the thing about Amazon that most people miss. Everyone thinks of it as a shopping logistics, like shopping website, and it's not. Like AWS, Amazon Web Services, is the profit engine. Cloud computing, AI infrastructure, enterprise software. That business doesn't care about oil prices. But here's what Ceasefire just changed. Amazon had implemented a 3.5% fuel and logistic surcharge to combat triple digit of oil prices. And as oil drops 15%, that surcharge potentially reverses. And that's a direct margin improvement, dropping straight to the bottom line. And recently, Wells Fargo reiterated a buy on Amazon with a price target of 305, and Amazon is now at 220. So that's like a 30% upside potential here. It's a bit a greedy price target from Wells Fargo. If you look at the average price target, we see $280, another 27% upside potential for Amazon. Uh, so, I mean, I am still bullish, and earnings are upcoming. Uh, when that surcharge reverses and AWS keeps growing, that's a powerful combination. I mean, Amazon is a massive company, and 7% move are harder to sustain at size than a smaller stock. If you look at the technical analysis of Amazon, I made the live stream. I mentioned Amazon on 23rd of March. That time the stock was at $210. Now the stock reached to $220. We have seen like 7% in 2 weeks, and we have the earnings upcoming on 23rd of April. We may see some bullishness, and earnings may kill that, and let's see what it will bring. I mean, if I see like these another like 10% from here, $240, I would consider getting the profits. Amazon is not a huge mover anymore. If you look at their PE ratio, they have 30 PE ratio. So if they reach to 33 PE ratio, I would take some profits. And Amazon is always a solid play in this high certainty environment with their investments and the various industries presence. So yeah, that was the for the Amazon. I will close the watching for it, and I will give you updates. And if you want to keep updated, please subscribe to our channel. You can watch the live streams and the short videos together. And if you like to get advantage of this software that I'm using, TradingView, I have this exclusive $15 discount, which you can find in the description. I really like this to check both fundamental and technical analysis. I make use of the different stock screeners, the stocks that I hold, general stocks, like I want to see like what our other stocks are doing. I can just click and see. It is very easy to use. And yeah, if you want to take an advantage, you can use this coupon code $15, and that would also give me some benefits. All right, so third stock I want to talk about is Dell. Dell up 12% in 2 weeks. The company nobody talks about, that's quietly winning the hard like they are quietly winning the AI hardware race. We called Dell on 23rd of March alongside Amazon. 12% in 2 weeks, actually the stronger performer of the two. Dell is not what your dad bought in 2003. Today, Dell is one of the primary suppliers of AI service infrastructure to enterprises. When a company wants to build an on-premise AI data center, not in the cloud, but inside their own building, they call Dell. And we were talking about SMCI and their problems, and we said Dell can benefit from this, and they did. They can increase their contracts like this for the in-house data centers, as the information security gets even important in these days. So this is a massive and growing market. Every bank, hospital, government agency that needs an AI but can't put sensitive data on a public cloud, that's Dell's customer. The AI infrastructure build out isn't just happening in Amazon and Google data centers, and it's happening in thousands of corporate servers rooms globally. So that's another angle to the AI infrastructure. And the ceasefire helps Dell specifically because lower oil costs reduces the cost of manufacturing and logistics, and make macro stability brings corporate IT budgets back from freeze mode to spending mode. And companies that paused infrastructure spending during the war can start moving again. So honestly, like we need to also talk about some important stuff. The Dell carries meaningful debt. So as you see, they have like $33 billion in of debt. It's not the clean balance sheet names we like AGX or First Solar, but margins are thinner than pure software companies. This is a high volume and lower margin business, and if you look at their margins, it is around 7%. They made 5% margins, so they need to have a huge volume of revenue to increase their sales. But so far, at 20p ratio, Dell looks attractive. If we look at the stock itself, as you see, we made the video on 23rd of March, and that was around 160. Now it reached to $190 even. So like 12% in 2 weeks. But we need to be careful. Like if we are going to 200 levels, $200 with this relief rally, we can see some yeah, profit taking. But so far, it's a very good gain in 2 weeks, 12%, which is very solid. So that was the third stock I wanted to mention, Dell. The fourth stock I wanted to mention is Google. Google 15% up in 1 week. So Google is 15% up in 1 week, and earnings are in 2 weeks. This story isn't over. We called Google on March 30th, 15% in 1 week. That's one of the strongest moves in the whole watch list. I mean, it's like huge. Like 15% in 1 week is a crazy gain, and it is up 3% today. And it's like I'm very happy with this pick. Like here's why Google specifically is a ceasefire winner. Like oil immunity. Google's revenue comes from digital advertising and cloud computing. As you know, when oil hits $100, people don't stop using Google search. Do you? Do you stop? You don't, right? Or you use Gemini. So businesses don't cancel their Google Cloud contracts. Oil is irrelevant their business model. Like the ceasefire today adds a macro stability on top of already strong fundamentals. We talked about Google's revenue and their net profit margins. I mean, they made $130 billion net income last year. So this tumble in oil eased the concerns and energy crisis that could fuel inflation, like reviving bets. Federal Reserve will cut the interest rates, and if the dovish Fed exists in the future, then it can really help the stock market. The stocks can rally further, but don't forget, this is a ceasefire. The business underneath for the Google is strong, was strong in Q4. Google Cloud up 48%, outpacing Microsoft Azure. And net margin 33% in $400 billion in revenue. So it is all good for Google stock. And the biggest catalyst is the earnings. So the earnings coming April 22nd, 2 weeks away from now. If you look at the stock itself, fundamentally, we called the Google at the bottom, like on 13th of March, when Google was 274, when nobody was touching. We talked about it, and now Google up to 317%, 15% in 1 week. Very good move. And And we have the earnings upcoming on the 29th of April, and we can see some relief to stock price. And as you see, we talked about this huge move, then a correction for the Google, and it, and I mentioned Google at the bottom. Now we are up 15%. I mean, if we are going to all-time high, I would consider taking some profits in this very short-term huge gains. Let's see. I will keep you updated with the Google. So this was for the Google stock. All right. So next stock I want to mention is First Solar. First Solar up 8% in 1 week. They are America's only solar manufacturer at scale, and it doesn't need the war uh, to keep winning. We called First Solar on March 30th. 8% in 1 week is very solid. Now oil just dropped 15%, and I'm going to be straight with you. Part of the original thesis was that expensive oil makes solar more competitive, and the argument is now softer today. But what hasn't changed, and this is the important part, the First Solar's competitive advantage has nothing to do with oil. It's about being the only major Americans made solar panel manufacturer. In a world of tariffs, trade wars, and onshoring pressure, you cannot replace that. Zero debt, $2.4 billion in cash, and 66 gigawatt backlog, and they are now this new Louisiana factory just opened. South Carolina facility is coming. New South Carolina uh, finishing line is designed to reduce the freight complexity, limit tariff exposure, and increase the share of the domestic content. So they will be even more competitive in this local production. and the price target for the First Solar remains at $250. Now we're at 200, so another 25% upside potential, says the analysts, which is bullish. And like, the negative part was for the First Solar is that the 2026 guidance came in below analyst expectations. The flat revenue year is not exciting, and the tax credit dependency is a policy risk. But I mean, looking at their PE ratio at 13, I think they are still safe play in this environment. A lot of stocks are overvalued with lots of PE ratios. I mean, looking at their balance sheet with low debt, high cash, I think it is still a safe play. If you look at the stock price itself, First Solar, I made the video when stock was down to $185. Now we are up to 200, so 8% in 1 week. As you remember, the analysts were giving $250 upside. I mean, if stock comes to 230, $40, I would take some profits. If it comes in a very very short period to here, another like 10 to 15% up from here, I would take some profits. uh, if you have really huge gains in very short period, you should definitely take the profits and continue watching the stock. So that's what I would do. um, so that was for the First Solar stock. The next stock I want to talk about is AGX, Argan. 17% in 1 week. This is one this one I want to revisit carefully because it's moved a lot. We called Argan on March 30th, 17% in 1 week, the strongest performer in the group. Remember, this one already surged 35% after Q4 earnings blowout on March 26th. So a total move from earnings to now is enormous. I mean, if you look at here for the Argan AGX, the stock was at 418, now at 600, right? So it's like 50% up from here from 26 March. When I talk about it, it was around 513. It made 17% in 1 week, and the bull case for AGX is the $2.9 billion backlog. It's their like 3x their yearly revenue, and it's a real money. They have the Texas plant, and they are just now included the S&P small cap 600. So that can be also a good money flow for the stock. And they have zero debt and $900 million in cash. Very positive. So the the current price is vastly exceeds the average analyst price target right now. If you look at the analyst price target, it is at 511. So we are 13% above analyst price target. I mean, if you have the stock, you can take some profits. It's a bit getting pricey at the moment because if you look at the PE ratio, stock is now at 60 PE ratio, which is a bit concerning. Uh, I mean, the ceasefire doesn't change AGX thesis at all. They build power for the AI data centers, not oil rigs. So this is a long-term structural story. The question today is simply how much of the story is already priced in. Like, it is not easy to have a huge growth when you are building these buildings, AI power plants. They take time. Of course, they can grow in 5-10 years rapidly, but they cannot grow like a software company. We need to be careful here. Uh, we are very high at $600. If I would take some profits if I had the stock. I don't have it right now, but I called it on 30th of March. So that was it for AGX. The next stock I want to talk about is Booking. Booking Holdings 13% in 1 week. And the ceasefire is the exact catalyst this stock has been waiting for. So we called this Booking Holdings on March 30th live stream, 13% in 1 week, and tonight the thesis just got its biggest confirmation. Today the stock price up 5% and very bullish right now. The entire case for Booking was simple. The Iran war suppressed travel. Ceasefire comes, travel demand rebounds, right? And that's not a theory anymore. That's happening right now. Think about today means specifically for Booking. I mean, like it is a temporary ceasefire, right? We need to be careful here. So that was bullish. And on top of this ceasefire, remember what else had happened? The stock split. In on For the Booking, we had a stock split on 6th of April. and this 25 for 1 stock split went live on 6th of April, 2 days ago, and the stock went like from 4,000 of dollars per share to $180 per share. So now, first time retail investors actually like can buy this stock, right. So one stock was 4,000, nobody can afford it. Now we have a broader audience that can afford the stock, and I think it will bring more attention to it. Like, as if you remember, I mentioned on 13th of March we had a huge correction, like 35% from all time high, and I said in the video that we had this double bottom. It's a good time to buy, and it was. The stock is up 13% in 1 week, and the stock, like the like Seeking Alpha recently described Booking as like low PE ratio for a 15% compounder, simply too cheap to ignore. So if you look at the analyst price targets, the average price target is at $233, up 27% from here. Like, if it goes there, I would take some profits, but not right now. Like, $230 is at all-time high. If we see the all-time high again in near future, I would take some profits, because if you buy from here, it would make like 40% profits. Hopefully we will see that. I will watch the stock and make you updates on it. So this was the 7 stocks I wanted to mention. uh, we have a relief rally today, and the stocks are up, and reason is because it's simple. This oil prices are dropped from 118 to 96, and closing below the 15 days average will help oil to go lower and lower. And we can see the confirmation from the VIX, the volatility index. We were up like 31, now we are down to 20. If we are staying below 22, then that can mean further uh, rally continues for the stock market. If the volatility index goes above 23, then that can mean another leg down for the stock market. But the ceasefire will be very, very important, and we will closely watch. If like in 2 3 weeks we will have a huge earnings season, and after the results of the earnings season, we may see some corrections, but until the earnings season, the stock market can stay bullish. All right, that was all. If you have any like stocks to analyze, you can write in the chat right now, then I can check those stocks. I see we have some watchers, and if you want to mention some stocks, I can check them fundamentally and technically and give you a short insight. If you don't, I will soon close the live stream. Do you have any ticker requests? I'm looking at the chat right now. All right. So, okay, I don't see any requests from the chat. All right. So that was it. Stay tuned for the late night stocks. Uh, I hope you like this live stream. Um, Basically, if you find useful these live streams, please hit the like button and subscribe to the channel. It is free, and it helps more than you think. Okay. Thank you very much for the watching this live stream and helping me. Stay tuned.